Today my name is Leon, and I'm going to be taking you through the Review Plus methodology that's now available in Draftworx. Now, the methodology is a complete rewrite of our previous review methodology, and to start off with, I just want to give you a few pointers, some general items with regards to Review Plus, and then we will start looking at some more details in the working papers as we go through. Now, firstly, we have a guidance document on every single one of our template sheets, and the purpose of the guidance document is to go and outline exactly which paragraphs of ISRE 2400 are covered by each working paper. There are instances where there are also references to some other external documents, and in those cases you will see, for instance, references to ISQC1 or indeed the IESBA code, where we look at, for instance, independence. Here you'll see there's an ISQC1 reference. In this working paper 10.00, we've also got hyperlinks just to where you can get the handbook and the IESBA code so that you can refer to further details where necessary. But in terms of ISRE 2400, we've actually put the paragraphs in place, and you don't need to go searching for the relevant paragraphs as you work through the file. When we get into our working papers, we have used blue to indicate any input cells where we are expecting some sort of a user input. So this is where you would go and document information. It's not the green as with RAC and Audit Light Plus. We are looking at a bit of a color change going forward. So look out for the blue cells, which are showing you where you need to go and insert some values. When you look at the questions, you will see that we also make very specific reference to paragraphs in each and every question. So where we can, we've just gone and put a direct reference link to the appropriate paragraph just to really assist you in going through the file. As we go through other documents, there are going to be one or two other things to be aware of as you work on files. But in general, these files are going to be responsive to answers. So as you answer things, this document or others may open or close additional questions as you go along. So please make sure that you follow the process, work through the file systematically, and complete all the necessary questions within your review. In terms of the level of detail that is required, every single engagement is going to be slightly different. So there's no hard and fast rule about how much detail to put into your file. The basic documentary requirements are contained in ISRE 2400, which does give some guidance as to what sort of information needs to be incorporated into your review file. But generally, where you have more complex info, go and put in more details just to provide a better backup for yourself in terms of ensuring that that review is compliant at the end of the day. Right, with the general overview briefly discussed, let's go and have a look at the details of our first working paper, which is the Engagement Acceptance and Continuance document. Now, this working paper consists of a number of questions. You will see that the first one here starts with if this engagement is a new or a continuing engagement, and you'll simply go and say specifically what it is. If it's a new engagement, we do have a working paper, so I'll leave it as a new engagement here, and you can go and have a look at the 10.01 video to go and look at the details of what we'll cover there. Then the ISQC1, there's a question around quality control and whether accepting this engagement would contravene any of the firm's quality assurance procedures. This and the next few questions are all just simply yes or no questions. We're looking in terms of the ISRE standard. Paragraph 29 has a number of requirements before you can accept a review engagement. The first one here, are you satisfied that there's a rational purpose for the engagement? So go through these questions. As you work through any of the questions, you can go and insert your initials and the date as you work through the file, and that'll just keep and help you keep tabs of where you are in the process. There are some additional questions. So question 9, question 10, question 12 to 15 that you can see here, there are white cells where the rest have drop downs, and the reason for that is these are cells where the values will be populated based on information that I capture in another working paper. So as soon as I go and capture information in 10.01, it'll return back the relevant details into this working paper for me. What I'm going to briefly do is I'm going to open up 10.04, and I'm going to go and just fill in the conclusions. And you'll see that when I go back to 10.00, that information is carried over for me. Okay, so we will look at all of these documents individually. Just know that what you complete there will come and assist you in completing 10.00. Okay, there are questions about the South African Companies Act. The major reason for that is just to go and specify the PIS score, and it's really just to ensure that you've documented somewhere in the file what the PIS score is, just to ensure that you have adequate justification for the fact that you have a review. And ultimately, at the end of the day, what we're wanting to do is give a conclusion whether or not you're willing to accept the review engagement, and a final accept-decline decision to be carried forward throughout the file. So very briefly, that is 10.00, really just a checklist to ensure that you have considered all the necessary items in terms of accepting a review engagement. 10.01 is the new engagement predecessor practitioner review. Now, ISRE 2400 does not really provide much detail in terms of what needs to be done when you are accepting an engagement for the first time. There is reference to it in paragraph A53, but that's just as part of the engagement letter. The IFAC Guide to Review Engagements, however, does provide some additional detail that you can go and have a look at in terms of getting an idea of what should be done with the predecessor auditor or a predecessor reviewer. Now, the procedures that we have then designed in this working paper are to go and comply with what we found in that guide. So you would go and document the firm name, who the engagement partner was in the previous year, and their address, get permission from the client to go and actually speak to the predecessor accountant, reviewer, auditor, whatever the case might be. Look at the reasons why your client is changing reviewer, or depending on if maybe it was an audit in the previous year, what are the reasons? What does the predecessor practitioner give as the reasons why the client is leaving? And just go and look if there are any other accountants that have refused to serve the client. And at the end of the day, can we review the predecessor's working papers? Have they given us access? And if so, document anything. And then we ultimately get to a conclusion, which you'll see it does link back to 10.02, because in 10.02 we're looking specifically at independence. So we're just confirming again, based on the fact that we're now considering it beyond just accepting the engagement, we're also looking at accepting the client for the first time, ultimately coming to a conclusion that we're satisfied that we've obtained sufficient information to assess whether or not to accept this engagement, or indeed this client, and that there are no reasons found or conclusions drawn that would impact the acceptance of the engagement based on the information that we've now gathered on this working paper. Hopefully at this point we can say yes. If you're logged in as partner, you'll see you'll be able to set as partner reviewed, and it'll automatically insert the initials and date for you on this working paper. In 10.02 we want to go and have a look at the firm's independence. Now this is still part of the engagement acceptance process, so we want to go and consider and ensure that we don't have financial interests in the client, that we don't have loans or guarantees from the client. And you'll see here we're referencing this IESBA handbook. It is the code of conduct. The psycho code of conduct also carries the same information, so if you've got the psycho code, the content is very much the same. Now if we, for instance, have financial interest in the client, you will see that a question is immediately raised. It's highlighted in yellow. What's the reason for the prohibition. So why do we have financial interests in the client? And from there, document actions taken to eliminate or reduce the threat to an acceptable level. Now, we've made specific mention here of reference back to the IESBA handbook, because within each of these sections, and that's why we've put the paragraph references here specifically, they do go and discuss the potential safeguards that you could implement in order to address the potential issue related to independence, depending on which question you're having a look at. So this document really is just a long list of potential areas where your independence could be compromised, coming up with an ultimate comment or additional considerations that you want to make, and then in action 3 we go and decide, are we independent? Now hopefully you can tick in all respects independent and can be seen as being independent with regards to this engagement. If it is something else, you need to go and consider whether or not you are able to actually accept this client. This conclusion will be carried over to 10.00 automatically, so you don't need to go and copy and paste anything. And then there's also just a item to check, are we satisfied that no existing prohibitions exist that would preclude the firm or any staff member from performing the engagement. And I haven't inserted a client name in the client setup, so that doesn't insert here, but I can again go and use the electronic sign-off to insert the partner initials and the date. There is an action 4 here as well to be completed after the engagement is completed. And here we just go and confirm that throughout the engagement we have remained independent. So in other words, none of these prohibitions have suddenly sprung up or become known to us during the review engagement. If it has, we need to reconsider whether we can continue with that client or not. So hopefully we can confirm that we've remained independent. You'll see that as I say yes, it brings up a paragraph saying that this confirmation is based on a continuous monitoring of firm level independence throughout the engagement, which may include reliance on firm level controls. Coming back to your quality control manual, which would stipulate how you monitor independence in the firm. Here there is no automatic completion. You will need to go and manually insert your initials and the date. Please don't do as I'm doing, insert it on the date that you start the engagement. This date is invalid. This date should be as close to your review date as possible to just show that you have considered independence throughout this engagement. In 10.03 we now are considering individual ethical, professional compliance and independence. So each member of the team will need to go and complete a separate sheet. You'll see they are identical, to go and give their name and fill in the questionnaire. Do you have integrity? Are you objective? Do you have professional competence and can you work with due care? Do you understand confidentiality? Do you work with professional behavior? And do you have no financial interest in the client, no loans and guarantees? And once again, this is a listing out of the handbook, the IESBA handbook. So go and look at that handbook if you're looking for any safeguards that you need. So if you say no, in other words, I do have financial interest in the client, we need to document reasons and document how you are going to reduce that threat level. So very similar to 10.02, except that now we're dealing at an individual level, and each team member should complete this declaration. Now here, at commencement of the review, you will need to go and insert your initials and the date, and then at the end of the review engagement as well. You will need to go and insert your signature and date manually. There's no automatic sign-off, so please ensure that you do go back and complete these documents at the end of the engagement. 10.04 is an assessment of the accounting framework that is being used by the client. Now, what you would do firstly is go and document what framework was used in the financial statements in the previous financial year. If it is not one of the options that we give, you can go and specify what that other framework was. We go and identify who the users of the financial statements are, And then we just go and document a few basic pieces of information about the client, just to start understanding the nature. This is not a high-level overview. We will still do detailed inquiries of management. But what we need to do is go and consider if it's a South African Companies Act that applies. We've got the template built to go with questions to help you decide in terms of the South African Companies Act. Otherwise, if it's not a South African Companies Act, document what laws or regulations are applicable, provide reference to where the work was done, and at the end of the day you can go and confirm based on either the Companies Act or other statutory considerations whether you are using the appropriate framework. Just document whether this is a special purpose reporting framework. There are a few paragraphs in ISRE 2400 which specifically address special purpose reporting frameworks, and ultimately you need to make a decision on whether this is an appropriate financial reporting framework. ISRE 2400 uses this term several times through the text, and we just need to go and ensure as the reviewer that an appropriate framework is being used. In 10.05, we're giving the review partner an opportunity to just go and consider all the team members of the engagement, and if there are potentially going to be experts involved, to go and decide basically what is the level of the person from the partner point of view, considering what has been documented in 10.03 and considering your knowledge of the person. Document whether they comply with the various requirements in terms of the engagement team. Now, you could have a situation where you have a very junior clerk who is not able to apply professional skepticism appropriately yet because they've just started work. The point here is just to ensure that the engagement team does contain some people who are able to apply professional skepticism, so that when complex matters arise, there is somebody in the team who can address it, who can deal with it, and who can either inform the partner, the manager, supervisor, depending on the size of the team. Often probably will be the partner directly. Here is an issue, please help me. So hopefully at least the partner can apply professional skepticism when conducting a review engagement. We do have a block for you to also document the engagement budget if you wish. At the end, we just have an action 2, an opportunity to basically sign off and say that we are happy and believe that our team is appropriate for this review engagement. Once again, it will be signed off automatically by the electronic review. But once again, at the end of the engagement, we have an opportunity for a sign-off just to once again confirm that throughout the engagement, these professional judgments, professional standards, professional skepticism has been exercised, and this once again is a manual sign-off that needs to be put onto the working paper. 10.30 is the engagement letter, and the contents of this engagement letter come directly from the IFAC guide. And there are a number of settings that you can just go and amend as you feel is appropriate in terms of getting the correct disclosures that you want in the engagement letter. There are sections that can be switched on and off, so it works exactly like one of our reports. And in fact, because it is named report engagement letter or report ENG letter, you can use letterheads to go and insert letterheads directly onto this file or onto this engagement letter for when you want to print it and give it to your client once you've signed it. And also there is space for them to at the end sign and return it back to you. So engagement letter, not too much to say about it. You will need to go and have a look if the contents are in accordance with your firm's policies and requirements. This is just a template that we've pulled, like I say, directly from the guide. It may need some editing. So please do go and consider the contents and ensure that you are happy with those contents before you use it for every single one of your review engagements. Document 12.00 is our planning materiality document. It is the first document in the planning process of our review engagement. In section 10 we covered all the engagement acceptance and continuance working papers. Now we want a materiality so that we can start ticking some boxes in this review engagement. In terms of deciding how we're going to execute the review itself. So here we would go and document users, provide any comments if necessary. Just note there is a reference here to ISRE 2400 paragraph A72 to be aware of. We go and pull in various bases. You can go and change that base with a drop down if you would like to. I'm going to keep it to opening, prior 1, prior 2. These are the approximate balances. Please go and ensure that if you are, for instance, going to use sales or revenues as the base for your materiality, please just do go and make sure that it is the appropriate base to use, or sorry, that the balance is actually appropriate, that you do have the correct balance from the financial statements. We do try and get it as accurate as possible, but there are instances where that will differ from what is on your financial statements depending on how you've linked various sections. You then decide which base you would like to use for materiality. Is it opening, prior 1 or prior 2? It needs to be one of these three options. What is the broad nature of the entity? So is it profit oriented, not for profit, specialized in some way? I'm going to go for profit orientated, and then just discuss why you've used opening figures to determine your materiality, just to ensure that your rationale is documented appropriately. Then in action 3 we're looking at percentages. Now these percentages are from discussion paper 6 issued by Psycha in 1984, I think it is. We've not yet converted these to the IFAC. In our audit methodologies, this is something that URBA, our local regulator, has requested us to use, or has indicated that this they believe is the industry norm. We do think, however, that we can probably change these to the IFAC guides, because URBA will not be reviewing review engagements as far as I am aware. So we'd appreciate feedback in terms of what percentages you'd like to see here in our review methodology. Once you've had a look at what the possible bases are, you would then go and type in a selected materiality. It needs to be less than one of these possibles, but you need to then go and justify that I'm using net profit at 10% for this materiality, so go and give a comprehensive reason as to that materiality. This figure, before I insert anything, will just simply be a 1. We don't calculate an average or the greater or rounded or anything. This is a professional judgment matter. You need to go and decide what materiality is going to be for this engagement in each situation. Also, please note, if you're familiar with audits, there is no performance materiality calculated here. We are just using materiality. We do have some specific materiality calculations, so if you want a specific materiality for one of your components or an area of your review. But then we also do have a clearly trivial threshold which we use just so that where you have misstatements which are less than this value, you don't have to accumulate them on your overs and unders schedule because they are clearly trivial. Now we do have a sheet here called AFS Details. The purpose of this working paper is just for you to see where the balances are coming from in the financial statement. So if there are differences, you can maybe track down where those differences are coming from this working paper. So you'll see I've got a revenue figure here of 215 million. In this case it does agree, but if there's a difference, it's a starting point of going and trying to understand why, and you'll see each of these is a reference to the lead schedule, and you can just go and open up the lead schedule and try and figure out where variances are coming from, if that is required. 12.05 is a preliminary analytical review. Now the purpose here is to go and start having a look at what has changed in the financial statements year on year. So we try and express the values on this working paper in accordance with the line items where they would appear on your financial statements. Look at the variance, so how much has it grown, decreased, and then we're looking for management comment on these variances. And this in essence becomes one of the first analytical procedures that you would perform as part of this review engagement. Now in ISRE 2400 paragraph A89, it tells us, in a review of financial statements, performing analytical procedures assists the practitioner in obtaining or updating the practitioner's understanding of the entity and its environment, including to be able to identify areas where material misstatements are likely to arise in the financial statements. That's the first of a number of bullets, and that's what we're doing here in this prelim analytical. We are obtaining an understanding of the entity and its environment, and what we're specifically wanting to go and do is identify areas where we feel there might be some material misstatement. There's a likelihood of material misstatement in these financial statements. So if we simply looked at an example here, we have trade and other receivables that has risen significantly over the 2 financial years presented, and this would immediately be for me an area where I would say, look, here is a likelihood of some sort of material misstatement because of the extent to which it has grown. But we go and obtain management comment, and you may choose whether you want to get management comment for different percentage ranges. All this does is changes what is highlighted, but you can go and document as much information as you feel is appropriate in the engagement. Go and give a comment from your point of view. Does management understand the difference? Does their explanation make sense? Because now we're actually doing a bit of inquiry alongside an analytical procedure, because we're analytically comparing prior year and current year, and prior 2 versus prior 1, looking at the movements. Do these make sense, or if necessary, document a matter identified which may indicate some form of misstatement, and that will then be carried over to a listing of all matters which are likely to indicate some form of misstatement. We've also got a ratio sheet, same process. Make comments from yourself or from management, and if there are matters which may indicate misstatement, you can go and document those matters in this working paper as well. 12.10 is our primary inquiry document, where we go and sit down, discuss with management, and start building an understanding of the entity. So there are a number of questions. You would go and provide comments, and once again provide as much detail as required. It could be that you could simply jot down a few items in these cells, or you might need to go and provide a separate working paper and rather provide a hyperlink to where you have documented information in your review file. The type of questions asked here are fairly simplified. We don't want to load up this working paper with hundreds of questions, but as I say, it's down to professional judgment how much information you're going to put into each working paper. Where you have questions here, for instance, around accounting policies, you could go and document your client's accounting policies here, or just provide a hyperlink to where you have documented accounting policies, or you could use this as a place to ask management what they think the key policies are in their financial statements. Depending on the nature of the client, depending on the size of the client, what you do here and what you complete is going to differ. There's queries here about estimates, and once again, do we say to management, what estimates have you made, or do we ask them specifically about known estimates, or do we once again document separately, hyperlink, and just put the hyperlink in this working paper? Just scrolling towards the end here, what is key is at the bottom of this working paper there's space to once again document any matters that have come to your attention which may cause the financial statements to be misstated. So we're again looking for likely misstatements, and if there are any, please do just go and document matter, and I'm going to document a second one, and I'll show you where that ends up on our listing. Now in 12.15, this is one of the more complex documents that we will deal with in Review Plus. If you are familiar with one of our audit methodologies, either RAC or Audit Lite Plus, the layout will seem fairly familiar. What we're trying to do here is we want to identify all the material components within the entity that we will need to review, because the standard tells us that we have to review material items. And so for each line item, once again, we try and pull in detail of the balances that we have, in this case under revenue. We have the opportunity to decide which materiality base to apply to this component. So we could now go and say, well, let's apply total revenues rather than our overall materiality. If you have, for instance, gone and designed specific materiality for one of your sections, based on that, if it's blank, it will default to overall materiality. And we now automatically go and see, well, is that balance quantitatively material? If it's quantitatively material, we've got to design additional procedures. If it's not quantitatively material, we need to decide if it is qualitatively material. Now, something like investment income, other income, might be zero balances, and we can just simply ignore them. We know that it's zero, we know that there's not going to be a problem. So I'm not even going to mark that it's qualitatively material. However, if I scroll down a little bit further, there are a couple of examples that I want to go through with you. Let's look at depreciation. Balance is 581,000. My materiality is 4.5 million. Is this quantitatively material? Definitely not. Now have a look here. There is a line item here, or a column, that talks about an additional review component. Now what we're doing with this additional review component is the review methodology and ISRA 2400, as I say, looks for firstly material items and items where we are suspecting or there's a likelihood of misstatement. If I go and say that depreciation is qualitatively material, and my justification for that is that if I don't review depreciation, I can't really review property, plant, and equipment as a whole very effectively. So I say it's qualitatively material, it's material, I need to do procedures. However, if I don't feel that it is qualitatively material and it has a balance, we're saying, well, let's consider this as an additional review component, and we're going to do a little analytical on the next sheet, and I'll show that to you in a moment, where we give you the opportunity to right now sign off on this component, say, you know what, we've got enough evidence now, we're happy to say that there is no likelihood of any misstatement, or material misstatement I should say, on this component. We have situations where, for instance, we have tax expense. My balances are zero. I'm expecting some sort of balance to occur here. I have two options. I can say that it is qualitatively material, which is probably quite appropriate in the case of tax expense. And if I say yes, you'll see that the additional review component line clears, and you don't need to worry about completing anything there. Or if I say no, it's not qualitatively material, but I want to make it an additional review component, what happens to those two items is they are carried over to my analytical sheet. Now here are all the items which are not material, qualitatively or quantitatively, and either have a balance or we have identified them as potential areas to consider in our review. Now we say, are we able to conclude that the balance is not likely to be misstated? Now we've put these variances in here as percentage change. When we're looking at 1205, our prelim analytical, we've not necessarily broken it down to the same components as we do when we start looking at components in 12.15. So the reason that we have these balances sitting here again is sometimes those percentages and groupings are different from 12.05. So we just want to confirm, are we happy that depreciation will not be, or it's not likely to be materially misstated? If I say yes, give some reference either here or comment or document, whatever the case might be. However, if I go to tax expense and I say, listen, I'm worried that this might be misstated, I'm going to say no. I don't necessarily have to document anything, but what is the matter now that's going to get carried through to say this is likely to be misstated? So tax is not calculated by the client, so I now need to go and perform more work on this item because I believe it is misstated. Next item, cash and cash equivalents. If you get to this point and you've got cash and cash equivalents here, I should probably consider going back to the components sheet, finding cash and cash equivalents, and I want to mark that as qualitatively material. Pretty important balance, and as soon as I do that, I go back to the analytical sheet and it's no longer visible on this working paper. Okay, so in summary, what we're trying to do up to this point in 12.15 is identify material components, both quantitatively and qualitatively. Then those items that have balance or look suspicious to us, we say, well, let's go and perform one little analytical review to go and decide whether or not there is a likelihood that this line item is going to be misstated. That's this analytical procedure. If I have a positive response here, depreciation, do I need to include this based on what we call the primary analytical review? No, we don't. But taxation, yes, we are going to review taxation because we're saying that we're not yet satisfied that we can conclude that this balance is not misstated. We then also give you the opportunity to go and document estimates, and what we will do is those estimates will appear on the relevant audit program just to jog your memory and ensure that any procedures that you design actually do consider potential estimates in the cycle. Right, once we have designed or decided what components we're going to review, we go and allocate them to cycles. So this will go and auto-populate as much as possible cycles, but you can go and modify this. Let's say, for instance, you want to review cost of sales with inventory rather than with trade and other payables. Simply using the drop-downs, delete, you can go and edit that as you wish. Okay. So at the end of the day, though, let me just go and delete other expenses. Please have a look here. It's telling me that not all components have been allocated to a cycle. That means I'm missing stuff. My audit programs, my review programs will not be complete. I need to go and ensure that everything is allocated to a cycle, and that's then going to start designing my review programs for me. The materiality is expressed here just as for basically your information, so that you don't need to jump back to 12.00 to check your materiality if you're unsure about whether or not you should use overall materiality or one of the specific materialities you may have calculated. Alright folks, it's one of the more complex documents. Two more things just to highlight on it, and then we're done with 12.50. Firstly, estimates. We have gone and put a whole lot of potential estimates in place for you, but if you feel that there are estimates that we're missing, simply say yes. It'll change the structure of the working paper and give you more lines to go and include more estimates for each component. And when you're done, you can go and hide it again with that. And then secondly, again, if you're familiar with RAC, we have the ability to summarize your cycles. So instead of trade and other receivables, borrowings, equity, bank and cash, trade and other receivables, all as separate cycles, which would be result in separate review programs, you can go and say, no, look, I'm going to summarize it, and then my cycles will be broken down into items on my statement of financial performance and items on my statement of comprehensive income. If we have too many, they're not going to fit in here. You will need to go and adjust how it's laid out and include other items in here where necessary. But that selection here is just to go and summarize it, and then you'll end up with fewer review programs to work through. The same number of procedures may still be required, but at least it's all together on one working paper and easier to follow, especially in very small engagements. Document 12.50 is really just there to provide an opportunity to document any information and details related to stuff that has been communicated to those charged with governance. The applicable paragraphs that is dealt with here is paragraph 42 of ISRA 2400, and it's really just throughout the engagement on a timely basis any matters concerning the review engagement that in your professional judgment are of sufficient importance to merit the attention of management or those charged with governance as appropriate, it must be communicated. So this is really just where you can document how, why, where. It's pretty free form. If you have none, then you would simply just document none on this working paper if nothing has come up, but it's there as a placeholder for you to go and insert information based on paragraph 42 when and if it becomes necessary. Document 1505 is similar to the risk registers that we have in RAC, and the purpose behind it is now just to go and capture all the various matters that have been raised. So we don't deal with risks, we just talk about matters which are likely to indicate a misstatement or likely misstatements. Use the term fairly loosely, but I hope you're following what I'm meaning. But now that we have these matters, we just need to allocate them to the relevant components. So we have those two matters that we documented in 12.10. I now simply go and use the drop down to say, well, that's going to impact revenue, and it's going to impact trade and other receivables, and it's going to go and impact property, plant, and equipment, for instance. What that'll do is it'll now carry this matter over to those components to ensure that the components represent or show the matter. The review program shows the matter, and you can design a procedure to address the matter. Let's go to the second one. I'm just going to allocate it to property, plant, and equipment. Okay. And then there is tax expense. Now you'll see that there's a column here to delete. The purpose behind this is if, for instance, I go back to 12.10 and I decide that that matter is no longer applicable, I simply delete it. Go back to 1505. You'll note that the matter has not gone away. And the reason for that is that if you've documented stuff and accidentally go and change something that significantly changes the content of this file, we don't want to lose stuff accidentally through your engagement. So now we need to go and with your login, you need to be logged in as a manager or a partner. Say yes, I want to delete that matter. I can just tab to another document and back, and now the matter has gone away. So that matter can only be deleted with a login, and that's what this delete column is for if you need to delete anything. So 1505, actually quite simple, just to go and allocate matters to a component, and then when we get to the review program, you'll see where that comes up. Once we've completed the planning process in section 12, we now want to start populating our review programs, and review programs are populated in the same way as RAC and Audit Line Plus, and we have a review tab, and you'll see that there's a populate review programs button. Click on it, you'll see on the bottom left corner things are happening. Those are my review programs being populated into the file, and it's now ready to continue. Go to audit programs, and I can go to the first one, and there you will see fixed asset investment property cycle review program is ready for me to use. Okay, so now we have our review program. Let's quickly go through some of the basics of it. We start at the top with a listing of those estimates. As I said when we were looking at 12.15, estimates that you raised there are carried over to this working paper just so that when you are performing your review procedures, you are aware of the estimates that are applicable. We then have material items and matters which are likely to be misstated. So firstly, we've got a matter which has been linked to property, plant, and equipment. So the detail of the matter will populate. It'll tell you that it relates to property, plant, and equipment. It's the only component at the moment in this cycle. If there were more, there can be up to 10. It would list any matters and indicate exactly which components they relate to. And then at the end, it tells me that for property, plant, and equipment, procedures are required for this component as it is quantitatively material and likely to be misstated based on this matter that was raised. So me as the user, I now know I need to go and decide on what procedures am I going to perform. Now we have included a number of suggested procedures which you can take a look at and use if you feel they are appropriate. But ultimately, you can also go and document your own procedures. Now, the source of the procedures that we have there, the first few are often from the IFAC guide on review engagements, and you can go and pick up that guide to go and look at the details there. And then we also do have the procedures from our old review templates. The reason we've carried them over is if we do have users that have used the old review template and want to continue with the same sort of procedures, at least the procedures haven't changed. If your firm doesn't like our procedures and would rather write your own, please get in touch with us and we can show you how to generate your own procedures template that can be applied to each one of your reviews. We can now go and design an additional procedure of our own by simply typing in the procedures details. As soon as I say yes, this will be performed. Note that the procedure now gets a procedure number. If I go to obtain a certificate of confirmation from the bank, you'll see that that procedure is now procedure 1 and that is 2. Okay, I've not yet allocated this to a component, so I need to say it's for property, plant, and equipment. And now you can go and perform the work. Go and insert reference to where you've done the work and decide on whether this procedure was successfully carried out or not. If it wasn't successful, we just do have an option here to go be able to say if it's unsuccessful, have you got the evidence from other procedures? In this case I do, and I'm happy that what I try to achieve there, I've got sufficient other evidence. Go and insert your initials and date as sign off that you've performed the procedures. Note we're not doing all these other procedures, only the ones that you wish to do. And once again, it comes down to professional judgment. How much detail do you want to do? How many procedures do you want to do? It's really up to you to decide and design which procedures you want to perform before the engagement actually commences, before you go and start executing. So please don't give this audit program blank to your audit clerks. They will go and waste a lot of time trying to work through each one of these steps when it's maybe not applicable and not really necessary based on the level of assurance you want for this client. Now, you will see we've got a little button here. We are able to go and hide procedures which are not going to be performed. So once you've decided exactly which procedures to perform, you can go and use this little drop down, and what it'll do is it's going to hide everything that's not applicable. So that's why I say before the team goes and starts executing, decide the procedures up front, go and hide the excess so that only the relevant procedures are performed. Now we can go and decide on a conclusion. Do I want to say in this case that I have sufficient appropriate evidence that has been gathered to conclude that this component is not materially misstated? So basically, can I sign it off? If not, I have two options. I can say, look, maybe there were audit adjustments or review adjustments that I had to make. We found an error. We have to give it to the client to adjust. So other than misstatements that have been transferred to our schedule of identified misstatements, we conclude that we've obtained sufficient evidence. So we can still sign this off, and we will just consider whether there is going to be a material impact when we get to our conclusion. Or ultimately we can say, look, we were not able to obtain sufficient appropriate evidence to give a conclusion on property, plant, and equipment. What then happens is, in terms of paragraph 57 of ISRE 2400, we now need to go and perform additional procedures to decide whether or not we believe that this component will be materially misstated or not. So we're saying we're not getting enough evidence here. We at least need to try and draw a conclusion about whether or not potential misstatements, not known misstatements, potential misstatements may be material or not. So we need to go and design more procedures, document the procedure. Will it be performed? Property, plant, and equipment. Reference, was it successful? And give it a sign off. and then we can give another final conclusion. Once again, you can hide excess if you wish, or what is our final conclusion? The component is not materially misstated, the component is materially misstated, or we were not able to obtain sufficient evidence to conclude, which could indicate some sort of a scope limitation. Let me just go and say that we have sufficient evidence, and now we can start drawing final conclusions on the cycle. We say, were the procedures customized as necessary? The data from the entity's accounting system and accounting records was adequate for the purpose of performing all analytical procedures documented above. Now please, that is an ISRE requirement. You do need to, for every single analytical procedure, ensure that the data that you're using is appropriate to perform the analytical procedures that you are performing. Then there are a number of questions. Was there any new information or evidence noted that may cast doubt about the entity's ability to continue as a going concern? If I say yes, it's telling me please go and document in 0315, which is my going concern working paper. If I say no, no problem. Any new evidence indicating a subsequent event, it tells me to go to 0320. Or no, I can go on. Related parties. Now with related parties, there is no reference that comes up specifically with a hyperlink, but document where the relevant information, including the impact on the report, is recorded. Consider use of the paragraph 50 template if not yet documented elsewhere. Now in our audit programs folder, there is nothing here about paragraph 30, but we have got a whole lot of templates sitting under the review tab under additional working papers for these special items, and you'll be shown where you need to use them. So if you have identified potential new related parties, you would go and open up paragraph 50's working paper and go and document information on there. To create a new working paper, you'll simply click related parties, give it a name, and in this case it's in section 30 that I found it. I want to save it under the audit programs folder, input that file, and now if I go to section 30, you'll see that working paper is available, and I can now go and complete it. This working paper becomes applicable if the practitioner becomes aware of arrangements. Say yes and document the necessary information, including a conclusion. Okay, let's just continue with the conclusions. I'm going to leave that one as yes. So now I can go and document using a hyperlink. I documented this in 30.23. The rest of the items are going to mark as no, 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 no. Sorry, in fact I can't just jump through that. The accounting policies selected and applied are consistent with the applicable financial reporting framework and are appropriate. This requires us to have designed some sort of a procedure related to accounting policies, so hopefully at this point we can draw this conclusion. Accounting estimates made by management appear reasonable. Here's those estimates popping up again. The financial statements provide adequate disclosures to enable the intended users to understand the effects of material transactions and events in the information conveyed in the financial statements, and this question relates specifically to the information that we've gathered that related to the components in the cycle, property, plant, and equipment. Are my disclosures adequate in the financial statements? And then I can go and give a final sign-off. And that is the process that you would need to follow through each and every audit program. Design the procedures, hide the not applicables, and give final conclusions on the work. Now, what we have noted in working on this methodology, a review is very, very circular. There is no one point in time where you say, have I got enough evidence? And you stop everything. You will work on something like property, plant, and equipment, and you'll do 3 procedures. Then you say, is there enough? Maybe not, so I'll do a 4th procedure. Is that enough? No, maybe not. Let's do a 5th. Is that enough? No, maybe a 6th. Until you get to a point where you say, listen, I'm not getting the evidence that I need. And then you would move over to these matters which may be material misstated, the extra round, paragraph 57, where we say, okay, well, I can't really determine the accuracy of this component. Now all I want to determine is if there is a potential for a material misstatement or not. Do one procedure. Have I got enough to draw that conclusion yet? Yes or no? If no, do another procedure. Do another procedure until you decide, okay, I'm happy, it's not material, or I'm not happy about it, but the difference is going to be material. I know that it's going to be material. I can justify that, I can make that assumption that it's going to be material, or I still say, listen, there's a scope limitation that has some implications in the file, so you do want to try and avoid that. So it's a bit difficult to say, do this, do this, do this, and then you're finished. You need to constantly, using professional judgment, decide whether or not you've achieved your desired levels of assurance throughout the process, continuously on a round and round and round in circles until you're happy at the end of the day. So you might just have one procedure and you decide that's enough, or you could have 5 and you say it's not. It's really going to depend on the level of assurance that you've obtained, or how detailed it is, how much information, and what is your gut feel at the end of the day. Then just in terms of the types of procedures that you will document on the audit programs or the review programs, the ISRE talks about additional procedures for these items. It doesn't say it has to be analytical, it doesn't say it has to be inquiry. So the type of procedures, the amount of detail, it's entirely left to you and your professional judgment to complete. Okay, with O2.10 we start with the finalization phase of the engagement. Now this is a summary of identified misstatements, and it's actually a document that you can continuously document information in as the engagement progresses. So as soon as you find a misstatement, come and immediately document it in the summary of misstatements, because here we need to go and we will put in an account number. We do have drop downs which incorporate all of the account numbers in the file, or if you need to create a new one that's not yet in the audit file because it's not necessarily documented or changed by the client, you would need to go and give that information. So there are my 2 accounts. What AFS category does this fall under? So this is a profit and loss account. This is a asset account. What's the component that it's linked to? Revenue, trade and other receivables. And what's the amount of the difference? So basically we're just building the journal here. Is it a current or prior year adjustment? And the reason that question is here as well, you need to bring adjustments in from the prior year, if there are any unadjusted ones in the previous year, to be able to assess materiality of adjustments. Give it a reference. If I start a new journal, you'll see as soon as I put a new reference in there, it puts a slightly thicker line just to make reading a little bit easier. Now we again assess quantitative materiality. There's still a question around qualitative materiality. Is it material basically at the end of the day? And remember, qualitative materiality, if it's fraud, then 10 Rand is qualitatively material and you need to mark it as material. Has management agreed to adjust this amount? If they have said no, document that fact. If they say yes, then it won't go through to our unadjusted differences. And then go and just document the nature, the causes of the misstatement, as well as reasons for not adjusting these amounts where applicable. Just go and document relevant information around this adjustment. If there is not something separate that you need to document in each line item, then just simply say as above. That'll get rid of the yellow cells. Once you've documented all of these items, it will go and aggregate the differences for you per component for current and prior and in total, per financial statement section, and it actually looks at whether or not on a line-by-line basis per financial statement area if it is a material difference in aggregate. Then we have questions about reviewing the uncorrected misstatements with consideration of those that have been adjusted by management, as well as the estimates tested throughout the engagement, is there an indication that management is using estimates and maybe even choosing which adjustments for us to process in order to bring bias to the financial statements? Is he trying to overstate or understate something by agreeing only to certain adjustments and by performing certain estimates with bias throughout the financial statements? If we say yes, document. If we say no, just document details related to that assessment. It could be not applicable. If you say no, there's no management bias here. If we're saying management has been biased, we then document information and we go and say, well, based on this bias, do we think that as a result management might cause these financial statements to be materially misstated? And if so, go and document additional procedures and say where you have documented that evidence. If no, we can simply just go and make those no's and we can move on. At this point now we want to go and consider the materiality in conjunction with the errors noted and those that have been adjusted, and see if there's any indication that materiality may need to be revised. If it does need to be revised, pop into the paragraph 44 template and go and revise your materiality. If we say no, it's not necessary, great. If we say yes, go and do the necessary. Okay, and then we go and give a conclusion. There are no uncorrected misstatements. Hopefully that is often what you will use. Or we can say uncorrected misstatements exist, but they do not result in a known or likely material impact on the financial statements. In this case, I can't say that because there is a known or a likely material misstatement that is happening here. And document known or potential impact on our report, we can go and say here that we are going to have to modify the report because of material errors. Okay, that is a summary of identified misstatements and is the first step of our finalization. O2.15 is there to deal with the requirements of paragraph 56 of ISRE 2400, and that is to reconcile the financial statements to the underlying records. Okay. Now, how you do this is entirely up to you. We've put an example procedure in there, but go and document what procedures you will be performing to reconcile the financial statements. And then we need to conclude, are you satisfied that the financial statements reconcile to the underlying records? Hopefully you can say yes. If you say no, where not, please provide details of the potential impact on our report. Okay, so once again, we're trying to point you in the direction of getting to a final conclusion here. And if there are deviations, we want to take it through to our report at the end of the day. Fairly simple document. Again, the amount of detail entirely up to your professional judgment. O315 is a going concern working paper, and in accordance with the standards, the working paper becomes applicable when, during the performance of the review, the practitioner becomes aware of events or conditions that may cast significant doubt over the entity's ability to continue as a going concern. Now, this could have happened right at the start of engagement. This could happen right at the end. If at any point there is doubt, we go and say, yes, this is applicable. We go and document the circumstances, inquire from management about their plans for future actions, document details of evaluation performed by management, so on and so forth. There is a questionnaire. At the end, based on the information gathered, is the going concern assumption appropriate in the financial statements? Yes or no? If no, is the matter or matters identified adequately disclosed in the financial statements as required? Yes or no? And will our report be modified? If we say yes, we've obviously got to go and document in our conclusion. But again, how you complete this, it's up to professional judgment, how much detail you put in here. Remember that in the inquiry phase, 12.10, we also consider going concern. But there it's a discussion about with management how have you looked at going concern? Look at how they've looked at it, and we might be quite happy with it. 0315 is where we have going concern uncertainties. 0320 is for us to go and consider subsequent events. We start with just any procedures that that management have carried out to identify subsequent events. Then any additional procedures that we might perform. And you'll see there that at a minimum we're saying that the details recorded here should include an undated inquiry of of any possible events up to the date of the report. And then at the end of the day, based on the procedures above or based on any evidence gathered in any other work, is there any evidence of a possible subsequent event that requires additional assessment? If we say yes, let's go and have a look. How many such events do we want to look at? So you can have 1 or 2 or up to 10. Go and detail what is a subsequent event, describe the event, give it a reference. When did it occur? Is it before the date of the financial statements? Well, in that case, this is not a subsequent event because a subsequent event should be after the issue of the financial statements. If it's between the date of the financials and the issue date of the report, there's information you need to document. If it is between the date of the report and issuing of the financial statements, paragraph 59 kicks in. And if it is after the date of the report and after the issuance of the financial statements to the shareholders, then there's no real guidance, but just document what you will do about it. Okay. However, if none of this is applicable, we have no subsequent events, we don't need to do anything further in this engagement. 04.05 is a checklist for the engagement partner to work through, just to go through. There's quite a number of sections of ISRE 2400 which relies on the partner taking responsibility in the engagement. Now, I'm not saying that this is not line items of they have to do this and this and this. This is overall quality of the review engagement is the responsibility of the partner. And if you scroll through, there's a whole lot of information about taking responsibility for appropriate engagement documentation being maintained, for instance. This is just really certification from the partner that he has taken responsibility for this engagement. Also, please note, I did mention it earlier in one of the other videos, there are documentary requirements, and please go and make sure that you've complied with those documentary requirements in your review engagement. Nothing too scary in this document. It does just highlight a few areas, as I say, which need to be considered in a review. 0505 is our overall conclusions working paper, and this working paper serves as a very comprehensive compliance checklist, as well as including a process for you to actually decide under which paragraph you are going to issue your review conclusion. Now, it takes you through various paragraphs of ISRE 2400, and you will see we reference all of those paragraphs, look at the conclusion that's been made in some of these, we gather information from all of these, and most of them we just give you the opportunity to say, has any additional information come to light which requires further discussions or comments? If we say yes, document that information. If no, we move on and we're happy, for instance in this case with firm's independence. Individual team member independence declaration, have a look what's popping up here. There are problems with this document. I haven't signed it off and I haven't answered all the questions, so it's sitting with a big no. It's not properly signed off. I need to go and fix that before this is cleared and that I can continue with conclusions. Again, any additional information. I'm just going to scroll through quickly on these items. Most of these, if there's something coming from the relevant working paper, it'll pop up. If not, then there's a question here, for instance, paragraph 26. That's also one of these additional working papers. Okay. Are there any indications that paragraph 26 may be applicable? And this is relevant considerations after an engagement acceptance. So something comes up which makes you doubt whether you should have accepted the client. If you say yes at this point, It says please use paragraph 26's document to complete this. If no, we can just move on with the engagement. Where I want to get to on this working paper specifically comes down to my review programs. Okay, now I've not completed this file completely yet. You'll see that only my fixed asset and investment property cycle review program is properly signed off. All of these should have a yes. We have conclusions here for non-material items, non-material components, and remember in 12.15 we said that depreciation was not material, and therefore we signed it off in 12.15 saying we have sufficient evidence to sign off on this document. Alright, then we go through on a component by component basis if we have obtained sufficient appropriate evidence, and that's based on the conclusion on our review programs, whether there is a likelihood that this component there's some sort of material misstatement, and then we also bring through any unadjusted misstatements to go and consider if this is a material misstatement. So we're concluding a whole lot of fantastic information from your review programs, and then we document an overall conclusion, just not yet our final report conclusion, but just information, impact on our report. What is this telling us about the engagement? Now obviously there's a whole lot incomplete. Once you've completed everything, this information will be properly documented. Alright, here is just a quick reference. Have a look. We opened up that related parties working paper, so it's already telling me that I've documented something here, and document additional details if you feel there is anything. Significant transactions outside of the normal course of business, that's a separate working paper. Anything documented, no, we can move on. I'm just going to scroll down again. These are just pulling in from separate working papers. Where we get to some of these questions, I'm just going to scroll a little bit ahead. We're talking about accounting policies, ISRE 2400, paragraph 69B III. Have a look. That is one of those conclusions that is on your review program. It pulls through the conclusion on a program by program basis to confirm that you've complied with all the relevant requirements. Just scrolling up, forming the practitioner's conclusion, that is paragraph 69, 71 and 72, you'll see that there are questions about the financial statements adequately referring to or describing the applicable reporting framework. Now that could simply just be that the financial state that they comply with IFRS for SME. Sometimes it can be more complex than that, and then you would need to go and document additional information. Scrolling down further, we have a look at uncorrected misstatements now in aggregate as well. Further up here, we looked at it at a component level. Now we also go and consider it in aggregate, and we decide what impact this will have on our conclusions. And these conclusions are actually pulling in from our working paper 0210. Then we get to a fantastic section of this working paper where we need to decide, okay, do we have an unmodified, a qualified, an adverse, or a disclaimer conclusion that we need to issue? And this questionnaire will take you through it. So firstly, have we obtained sufficient evidence to obtain this limited assurance and say that nothing comes to our attention to believe that the financial statements are not prepared in all material respects in accordance with the applicable financial reporting framework? Now in this case, I can't say yes to this because I have a few issues. So then we say, well, okay, have you determined that the financial statements are materially misstated? If I say yes to that, it asks me another question. Well, is the impact pervasive or not to the financial statements? If I say yes, then the wording comes to me from ISRE 2400, paragraph 78, my qualified conclusion, and I have to go and include a basis for conclusion paragraph in terms of ISRE 2400, paragraph 80. If I say it's not pervasive, it's not paragraph 78 that I conclude on, it's actually paragraph 79, and I still need to include a basis of conclusion. So depending on how you have answered these questions, can you see that different sections of the possible report are opening and closing, and it takes you to the correct paragraph on which you need to conclude. It then gives you an opportunity to just go and give yourself some rough wording or detailed wording of exactly how you're going to phrase it in your report. And then at the end of the day, we've got a checklist of everything that has got to be included in your practitioner's report. So it's got to have a title. Now, if you are using our template, this should be hopefully a very quick exercise for you to check, but this is the requirements in terms of ISRE 2400 of what needs to be on your conclusion. Okay, the last document in our review is 0640, which is a management rep letter. Now, there are a few questions to answer here in terms of paragraph 61, 62, and so on and so forth. What we're looking for is just an opportunity for you to actually sit down with management. Instead of just issuing a management rep letter, go and sit down with management and say, have you fulfilled your responsibility for the preparation of financial statements? Yes? Or are you not willing as the director to provide a representation? Now, the assumption is always that they're going to give a yes, but we're just wanting to provide the opportunity to go a little wider with the scope of this document. Then, if events and information required to be disclosed, you will see here that management can say, look, we've fully disclosed it, or we can say, look, this is not relevant, or they can just say, look, we're not willing to provide representation once again on these questions. So you can go and fill in depending on how management responds to these items, so that at the end of the day you don't end up with an argument of them saying, well, you're saying that I disclosed this but it's not applicable. Then you can at least document this information. Now, where I say something is not relevant, it's also going to go and say, well, are you satisfied that it's not relevant? So if management says, oh, we're related parties is not relevant, but you have found lots of related party transactions, you might feel that management is not justified in saying that it's not relevant. So based on how you answer these questions and how you document your conclusions on this working paper, it's going to edit the contents of this rep letter and only include those items that are actually applicable to your client and that they've actually agreed to give representation on. Now, if they are refusing to give representation, you've got to go and discuss the matters with management and say, well, that's one of our requirements. Right at the start, you said you would give representation in our engagement letter, and now you are refusing to give representation. How is this going to impact your conclusion? And this will actually carry over back to your overall conclusions working paper as well, so that if at this point you're saying management are not willing to represent, maybe it results in a disclaimer of opinion in your conclusion. Okay, folks, I've now gone through most of the standard documents in our Review Plus. I've not gone into detail in all our additional working papers. Each one of these only gets used in a case where it is a requirement. The working papers will guide you towards this, so if you need to use paragraph 26, whatever working paper requires it will indicate, please create a file with paragraphs 26 template and document that information there. If you're wanting to just look at how to create these, have a look at our video on the review programs 80.20. Just have a look at our video on the review programs, and it'll just take you through how to create one of these working papers. So that's all from me. Thanks very much for listening to the training video. Hope that it'll help you in your review engagements going forward. Please, any comments, thoughts, suggestions, queries, pop them to support@draftworx.com. We'd be more than happy to help out and have a look at any suggestions or queries and assist you through the process of implementing Review Plus. Thanks very much. Goodbye.